Andrew Holland is now joining us. He's our market master of the day, Chief Executive Officer, Avendus Alternate Strategies. Andrew, great to have you with us here on the program. Thank you very much. Overall, this pullback rally, especially in the US, seems to be fading a little bit. Momentum seems to be coming off. You could see that in stocks, the dollar, which came back up, yields, the 2-year, almost 20 basis points higher last week. Will that show up here in any significant way? Because, the market's been very, very close to all-time highs here in India. What's your sense?
It's quite interesting, Prashant. We've been getting all the kind of brokers forecast going into next year, and it's pretty much consensus now. It's something we talked about before as well, that as the Fed goes on pause next year, at some point, maybe in the first quarter, then emerging markets will be the place to find growth and a pickup in the global economy. Obviously not initially, but that's how the market will play it. But in that, interestingly, whilst everyone's talking about emerging markets, I think the overweights are going to be more of the exporting type countries like Korea, China, which is obviously, we've seen some kind of pickup there from the very low levels. So India actually remains an underweight. So as we said before, we do expect India to get the flows, but perhaps the flows will be more towards those markets which are deemed, one, to get a quicker pickup as the economy starts to pick up in the second half of next year, and two, the valuations are more compelling in those markets as well. So I think, between now and the end of the year, I think a lot of investors will probably just sit on the sidelines, take risk off the table, because there's still, the Fed event in December, and obviously we'll be waiting for the commentary on that. But I think for the time being, our market's been a great outperformer, and it's still being used a little bit for obviously taking some money off the table and trying to actively use it in other markets which have been beaten down a lot more.
Okay. Andrew, hi, good morning. So what do you do with individual pockets now? Do you still see some pockets of value? I'm asking because there seems to be no positive trigger for most industries. I mean, if you look at banks, a lot of the rally has already taken place. In IT, there's still no clarity whether business will improve. If the US goes into a recession, there could be more downsides. So where do you see a clear uptrend now where perhaps investors can participate in? I'm asking from a sectoral point of view.
So I think we're all scratching our heads on that one, because even with what was not a bad earnings season, you probably see more downgrades to earnings than upgrades, and that's just skewing the kind of valuation across many different sectors. I still think the themes that you have to look for would be, and I still like the banking sector and the auto sector. I mean, they might have those kind of pullbacks, but those are the times when you should be buying into it. But I think the themes could continue to remain defense, renewables, and then the kind of corporate capex cycle into those those industries where the supply chain has been difficult going forward. So semiconductors is one, electronics will be the other. So these are the new kind of themes which I think will play out in 2023. So the valuations, some of these sectors still remain high, but I think you have to be very selective on, who's going to be the beneficiary. We talked about this before, like if it's a capex cycle, it's not your normal roads and bridges. It's going to be those specialized, factories, buildings, which take a different type of company to help construct or build those businesses. So I think that's the one area I would look at. The second area I would think about as well is a lot of these platform stocks. I know at the moment there's a lot of shares, coming out as the freeze on some of the shareholders is open now for them to sell. But I think once that's over, I think this is again an industry which I think needs more more kind of detailed analysis, because it's not going away from us. It's just a matter of other valuations and profitability there now for sustainable move forward.
Hi, Andrew. Good morning. New age companies are looking interesting is the sense that I'm getting. Which ones?
Well, there's only two or three of them, and unfortunately I can't mention individual stocks, but I think we know which ones they are, where the shares are coming open for people to sell. So I think obviously the Nikes, the Zomato's, and Paytms are the three which I would think as the platform companies. But I think a lot more analysis just needs to be done. But I think it's a sector which I think is going to gain more attention over the next 6 to 9 months.
Absolutely. By the way, the market breadth has turned decisively. We've got 1,100 stocks lower now and 850 stocks which are higher. Market breadth always is an indicator of just the texture and how that is turning. That's what I'm talking about. So that's crossed over. On the downside, and not in a good way, Cochin Shipyard is down 5%. Mazgaon is down 5%. So, these are stocks which were basically the leaders of the rally. I mean, pockets, defense, etc., railway infrastructure names recently. So market's been rotating into newer pockets of winners and gainers, and you're seeing some profit booking coming through in some of these names at this point. Andrew, so what else are you kind of taking money off from? Where are you putting incremental money to work? Anything else apart from what we discussed?
No, Prashant, I mean, you can try and find, obviously the PSU banks has been, as we've talked before, over many years, it's been a place to rent in terms of the stocks, and that's played out very well. But, it's probably not sustainable from these levels onwards in the very short term. So those are the more shorter term trades, you're going to have to kind of think about as well. But to be honest, I think the market's going to grapple with another factor as well, Prashant, which is this. Whilst equities as an asset class has been, there's no other place to be when interest rates are lower. Given where interest rates are at the moment, and the fact that you can lock in, 7.5 plus in terms of, kind of guaranteed returns, I think investors are, moving across back to debt, and I think that's a phase that will continue. Until the RBI stops, and perhaps there's probably one more hike to come. But that's where we're seeing a lot of families and high net worth individuals now looking to move. And I think overseas, again, foreign investors, whilst they're buying into the emerging market story, the big risk is always going to be whether the recession is a lot more severe than people are hoping for at the moment. And that would lead to the other thing, which is probably putting pressure on the rupee at the moment, is our kind of current account deficit and balance of payments, because obviously our exports would falter because of that. So that's something which the market is starting to get to grips with. It's the outside risk of it being worse than the market's trying to bake in at the moment.
Just a final question. By the way, the market is taking a turn for the worse, so just don't lose sight of that. The Nifty is now down 140 points. The Bank Nifty is dragging its feet, and it's across the board. So it looks like it's a case of profit taking. There's Reliance, ITC, Bajaj Finance, ONGC, HDFC. So you slice through across sectors, and the large caps are all under pressure. Just a final word on, whether there is a big sell-off coming in this market, because we are sort of at elevated levels and things are not looking great across the globe as well. There is still an energy crisis playing out in Europe. In the US, a guest earlier on was saying that there's a 40% chance of a recession as well. Are you looking at a large sell-off for India, or do you think that India will continue to be resilient despite all the issues globally?
So to my mind, there's only way there's a large sell-off coming in India is if there's one of those unintended consequences of the Fed and other central banks tightening. We've seen it in the crypto world, and any tightening is going to be a financial problem, not an economic problem. We know the economic problems because of interest rate tightening. It's unintended consequences. So if there is a problem, it's going to be financial, and that would take our market down along with everyone else. But I think we'd probably be hit a little bit harder because there is still a lot of profits on the table compared to other emerging markets, particularly in Asia. So that's the only thing I can see that would bring our market down significantly at this time.
Andrew, very quickly before we let you go, who's taking home the glory? from the World Cup?
Well, obviously I've got to say England, and I'll be there, sat there tonight watching, and it should be a slam dunk, but you never know.
All right, Andrew, look forward to chatting up with you all, soon, and let's see whether or not England can finally do it. Well, let's
Wow,
move.